What's up guys, welcome to Glory Investing Show. I hope everyone is having green days on the market as we are living in crazy times, surrounded with Dogecoin warriors on one side and angry boomers on the other. But if you really try not to pay attention to all this nonsense that is happening in 2021 and stay with principles of investing, you will be able to continue making your passive income and growing it through years like this one. Let's take a look on Warren Buffett's dividend income in 2020. Warren made roughly $4,527,257,825 in dividend income last year. That is $143 per second, $8,613 per minute, $516,810 per hour, $12,403,466 per day, and $377,271,487 per month. And I know what you think about these numbers, but remember, we have different expenses and different goals, and we are not starting from the same financial standpoints, but everyone should be able to put aside a little bit of money to invest in their financial freedom. I would appreciate if you guys smash that like button and subscribe. It would mean a lot to us if you support the channel. Today, we are doing your guys' favorite series, $1,000 dividend income a month with only 3 stocks. If you guys missed my previous episodes, check out my videos. To be successful in long-term dividend investing, you need to understand what is compound interest and inflation. The best way to explain compound interest is the snowball effect. Your investments accumulate over time from capital gains and from dividends that are paid and reinvested every year. It may start small, but it will pick up more snow, and in the end, your snowball will grow significantly. So if you want to see your snowball getting big, it is crucial for you to reinvest all your dividend earnings. Compound effect can get more extreme the more time you let it go. Half of Warren Buffett's wealth was made after he turned 55. Inflation is the general upward movement of the price of goods and services in an economy. With inflation, everything from a gallon of milk to a gallon of gas will cost more tomorrow than it does today. Beating inflation isn't hard, but you need a strategy in place to do the job. Currently, the annual rate of inflation is 2.1 according to the latest Consumer Price Index. When you own a stock, you own part of a corporation which has price-setting power. That means corporate book value as well as revenue rise with inflation. Easy way to fight the inflation is make sure that your capital gains are bigger than average inflation. Now, let's cut to the chase and let's talk about our first stock. The market cap is around $456 billion. The price of the stock on May 2nd, 2021 is $153.81. 52-week low is $82.40 and 52-week high is $161.69. The dividend yield is 2.34%. and dividend growth is for 8 years now. The 5-year growth rate is 15.39%, and JPM is having a PE of 11.96. JPM delivered a set of blowout results for the first quarter of 2021, but we believe that earnings represent a cyclical peak and have been fully priced in. Strong revenues were primarily driven by record activity in corporate and investment banking. Net interest revenues fell again from quarter 4. JP Morgan reduced its loan loss reserves by $5.2 billion, reflecting the fact that the bank had been ultra-conservative in building up reserves last year. This is telling me that they are expecting people not to buy real estate like crazy this year, and that will put real estate prices down for 2021. That can be both good and bad depending on whether you're a homeowner or not. Investment banking side of the business was very profitable as the Fed pumped lots of money into the financial market supporting these activities, and all of us are buying stocks all across Robinhood. Robinhood emailed customers this week saying it is now using JP Morgan, the biggest US bank by assets, to process transactions for cash management accounts. My second stock for today is this one. Market cap is around $124 billion. The price of the stock on May 2nd, 2021 was $228.11. 52-week low is $100.22 and 52-week high is $237.78. Dividend yield is 1.81%, and when it comes to dividend growth, the last dividend increase was in 2019. CAT is having a PE of 36.47. Caterpillar's results are a great example of just how far away from expectations results have become. Levered to the strength of the global industrial economy, Caterpillar sells expensive gear that requires a certain confidence from buyers about what prospects for demand look like. Buying a backhoe is not like buying a Peloton. You got to really know you're going to use it. Caterpillar posted revenues of $11.9 billion, up 12% year on year and beating analysts' estimates of $10.9 billion. The company reported adjusted earnings of $2.87 per share in the first quarter that blew past consensus estimates of $1.94 per share. CAT stated that the rise in revenues was driven by higher sales volumes due to rising demand from end users and from dealers increasing their inventories more during the quarter versus the same period last year. I suggest that you definitely check out this stock. Before we get to the last one, I just want to tell you that we are trying to make as many episodes as we can. People like the idea of lazy portfolio that we created here. It is easy to do some quality research and not worry about your investment for the next 10 years while your dividend income is constantly increasing. There is a lot of ways to make money in the stock market, such as options trading that we also made video about. But our goal is to teach you how to get to financial freedom so you can spend more time with your families and people you love, or travel without thinking how you will pay the next month's bills. I really hope that we will teach you something new and that in the end of this video, some of you will download an investing app and start your financial journey. Now, let's get back to our third stock.
2,000 years later.
And the last stock is... Yep, you guessed it right. It's a fast food giant. Market cap is around $176 billion. The price of the stock on May 2nd, 2021 was $236.08. 52-week low is $167.85 and 52-week high is $236.29. Dividend yield is 2.19% and dividend growth is 12 years in a row. And McDonald's is having a PE of 34.26. McDonald's Corporation released its first quarter of 2021 results before the opening bell on April 29th. The fast food chain's revenue surpassed Wall Street's expectations and returned to pre-pandemic levels on the success of advertising and promotions. Earnings also beat estimates. Revenue stood at $5.12 billion, which reflected a growth of 9% as compared to last year. Global comparable store sales increased 7.5% in the reported quarter due to strong recovery in the international operated markets. McDonald's industry-leading profitability was pinched during the pandemic but has now fully recovered. Operating margin jumped to 44.5% of sales in the first quarter compared to 35.9% a year ago. McDonald's is in fact flush with cash right now, having entered the year with over $3 billion on the books. It is on pace to convert over 90% of its 2021 earnings into free cash flow. So guys, the most important part that we all waited for is here. You will need approximately 1,150 shares of JPM to make around $4,140 a year. you will need approximately 820 shares of McDonald's to make around $4,231 annually. And for CAT, you will need approximately 980 shares to make around $4,037 annually. If you guys enjoyed the video and learned something new, I would appreciate if you made that like button turn blue and smash that bell button so you get notified every time we post a new video. Also, follow us on Pinterest and Instagram. We love you guys and we will see you soon. Keep investing. We are proud to finally present you Income Addict merch. Made by stock investors for stock investors. All of us who are chasing those gains, all of us who like dividend and passive income. We will leave the link below. Feel free to use the code GLORY for discount on the entire website. We love you all and don't forget to smash that like button.